Hey guys, hope you are all having an amazing green day. Today was fantastic, seeing GME and AMC continue trotting along in the bullish course. However, no good deed will go unpunished. Tomorrow we have a monster catalyst that will either send us back down or rally the market to the stratosphere. You see, tomorrow we will receive the Consumer Price Index data by the Bureau of Labor Statistics, and I am more bearish on what to expect than bullish. In fact, I will go down as a shill right now for what I am about to say, so please remember to not use curse words or anything that will get you banned by YouTube when you rip me a new one in the comments below. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. I wouldn't be me if I was dishonest. I could easily talk about today's pump, about the moon, how the end is near and tendies are green, but I won't. I won't talk about green because I believe what happened today is nothing more than a pump and dump, and that the runs we had were fixed and covered already. Simply put, there is no empirical evidence to suggest or excuse this run we have had for 2 days, and I think it's a trap to get people to FOMO before shorters call it quits and pull the rug underneath the feet of many investors. As we know, most of us are holders, but there is a good percentage of buyers who will panic sell, and that is who they are targeting. If that report comes even 0.1% higher than 7, the whole market could begin dumping. They let it run for all these days to get retail comfortable, because I know that Wall Street knows what is in those numbers for tomorrow. Remember, everyone talks behind the doors in this world, and only retail is caught by surprises. I think that if the numbers are ugly, with inflation growing more than expected, every big investor and their grandmother are going to be dumping today after the post-market hours, when nobody can see and panic. But I think I am getting ahead of myself. Before we even begin talking about the markets, let's talk about inflation. The Consumer Price Index that will be released tomorrow on Thursday is expected to register a nasty 7.2% annual gain for January, which would show an acceleration from the 7% year-over-year increase in December. Consumer prices likely rose 0.4% compared to the 0.6% that we saw at the end of 2021. There are 3 main things that most institutional investors are going to be particularly paying attention to, and those are the costs for food, the cost associated with labor, and energy. For some reason, I feel like I speak in a void when I inform people that energy prices are a huge deal with the current state of inflation. They are a huge contributor to the sad state of affairs we are in, as they are up 29% year-over-year as of December of last year. Crude oil and natural gases jumped to record levels for the first time since 2014. The real reason why energy is the only thing going to the moon right now instead of us is that their costs are being compounded by rising oil prices, while vehicle prices are being driven by the scarcity brought by supply issues. Rents keep on blowing into the stratosphere and into Andromeda Galaxy, and then we have food, which is often touted as being the core of the Consumer Price Index. Food alone is expected to rise 5.9%, marking the biggest jump since 1982, and it rose 5.5% last month. To say the economy is bullish now, as the media have been touting, is the biggest lie to try to get retail to bag hold. Reality is, we are still very vulnerable to the changes, and we are nowhere near the end of this rocky ride out of volatility. You might ask, why am I so certain numbers are going to be red? Simulate and trade. Why are you shilling against the moon soon movement for GME and AMC? Well, the reason why I am clapping down your cheeks on this issue, the thing that gives me certainty as to my prognosis, is Washington, D.C. With the sad state of affairs we are in, the current administration would be hyping up data and progress if these numbers were to be good. The current administration is indeed having difficulty with public approval, so they would be jumping on anything to brag about. However, that is not the case. The administration, and the rest of Washington, D.C. is more deadpan silent than when I asked my crush to go to prom with me. You guys know that guy the first barely talk about, Jerome the Joke Powell, and even more pathetic, the Governor Lael Brainerd, who both await confirmation to take and hold chair and vice chair at the most important institution in economics. They too have been way too quiet about this, and these 2 factors alone have cemented in me the confidence to think that the numbers are going to be downright ugly tomorrow. As such, we ask ourselves, what's going to happen to the markets tomorrow? Well, this is where it gets tricky. I think everyone knows the numbers are ugly, and that a sell-off will happen. However, the extent of the sell-off is what is in question here right now. I think that inflation is anywhere above 7.3%, things are going to get redder than my bank account, and that's quite the feat. Things are going to get absolutely brutal and nasty all around, and the sell-off will cripple much of the progress that not only stocks have made, but cryptocurrencies as well. This sell-off is what I think shorters are counting to trap some of the investors who experienced a bit of FOMO on today's run in regards to GME and AMC. Now, I must say again, I know that investors in GME and AMC are super strong, but there is always, statistically speaking, a portion of people who will sell at a loss and not hold. This is just mathematical fact, and they are planning on whipping the floor with a bunch of people who got caught buying above 110. For those asking me why I haven't been posting screenshots of my purchases on Twitter, this is why. I have been slowly waiting, biding my time because I think the bears are going to roar higher than whatever the sound of bulls is. However, I am not Nostradamus, and there is a chance that I could be wrong. Tomorrow the numbers could be bullish, and if they are beneath 7%, it would show that the government is making significant progress, driving a market rally to every asset and security out there. Bullishly enough, elevated inflation levels right now have not seemed to have caused long-term inflation expectations to unanchored, not yet, so that along with a more bullish consumer price index performance than expected could have us run. If inflation is between the gray zone, between 7.1 and 7.3, I think we see a bearish performance, because it will note an increase in inflation since last month. However, I don't think it will be crushing, I think we just start retesting support that we made last week. Again guys, I am certain, personally speaking, that tomorrow numbers are gonna be ugly, real ugly. Already leaks are happening and reports show the White House is saying tomorrow's inflation data will show a high year-on-year figure. This run that we saw today in the market is a trap to get retail to sell at losses in the billions tomorrow. If the number is 7.3 or higher for inflation, GME stands to test 104 and possibly go under, while AMC could retest 14. Before we talk about today, I do want to state that I don't say this out of being a contrarian. I have been right in all my expectations about the markets since October. I called the large impact and the correct we were going to see back in early December. I said we weren't going to moon in fall of last year during the summer run, and that the Evergrande default was all calculated and premeditated before it was making headlines. You can easily verify all this information. Trust me, I hate being the sour Sally that I am in saying the negative stuff, but I am completely zen. I will not compromise my honesty and character to appease the ego of fragile investors. We are most likely going to retest support tomorrow, and if we fall really bad, a portion will sell off. But that is fine, because all that selling will be countered with a ton of buyers who plan on holding. Today's run, along with yesterday's, was brought about by shorters who are trapping retail. They eased off on the algorithms and let retail form rallies and cheer before they come for our jugular. Tomorrow, I want you to do a couple things. I want you to stay zen. I want you to not expect anything at all, stay completely clear, and to accept whatever comes down our way as unavoidable. Destiny will happen regardless of what we do, and the reality is, destiny is being led by the vulnerable conditions of our economy, which were brought about mostly at fault by the Fed and its pathetic scum of the earth, Jerome the Joke Powell. For those that will call me a shill for not saying the popular things, be sure to not use profane language. Though I laugh at hater comments, I do not want YouTube to restrict you from commenting on my videos. Let's now talk about today. The Fed submitted over $1.653 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 51% of the total volume today, while dark pool trades for GameStop accounted for 54% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly, gaining over 15% for the day. It has been a long time since AMC chose violence and erupted the way it did today, but you already know where I stand on this. There is nothing to discuss about today's chart. It literally went up with small periods of retracement and almost no consolidation. Today's run, if markets fall tomorrow, will be completely whipped out. As for tomorrow, AMC will find support at 17.75, 16.50 and 15.50. Resistance will be met at 19, 20 and 20.50. I think tomorrow we test support, that we break below 17.50, and fall to 16.50. If we don't hold that, we could easily test 14 by Friday. If the reports are bad, markets are going to be bleeding for a couple of days. GameStop traded bullishly, gaining over 7% for the day. Again, there was a lot of volatility early when markets opened, but bulls took over and led the stock to go from 113 to close at 124.29. It literally just went up, with small retracements and no consolidation. If the markets run blood tomorrow, GME is going to bleed like the Normandy beach. As for tomorrow, GameStop will find support at 120, 117 and 113. Resistance will be met at 125, 130 and 133. You already know where I stand on this. I have about $17,000 liquid right now to put into GME stock and other assets if we get clapped tomorrow. I want to propose something. I want each and every single one of you to come on over to my Discord once and for all. Tomorrow, we are definitely going to be talking about everything happening in the markets. Whether it's a rally, or the expect fall, I do not want you guys to survive the brunt of this assault alone. I want you to download Discord if you don't have it and click the link below and join me and over 3,000 other members right now. And that is all I have for you guys today. Thank you all so much for watching my video. Let me know your thoughts below in the comments. Remember to check out this morning's video as well if you missed it, it's very important. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.